Hey everyone, I'm Justin Egliskis. Welcome back to the channel where we prioritize health, financials, and nutrition. So today, being Saturday the 18th, I wanted to take some time to break down my thoughts on the futures and where we are on the weekly, the daily, and what information can be derived from our current environment. Okay, so now we're looking at the S&P and we're on a weekly chart. So let's see what we could really derive from this. But number one, we're in a beautiful, strong uptrend. So that has to be the context that we do not forget or leave out. Recently, you see we had that downwards channel of about 6 weeks. And you look to the prior breakout before the downwards channel. So you got 6 or 7 weeks, you got 7 weeks, and you got 1, 2, 3, 4, 5, 6, 7. So for me, I'm usually looking for a pattern of 6 to 7, 8 weeks plus. So now on our current channel or pattern, you have 1, 2, 3, 4, 5, 6, 7, but the range is very wide. I would like to see things tighten up. Maybe we have a doji or just form a smaller, tighter range at the top side of the channel. That would have me leaning towards the breakout. When you take swing trades, you want to be applying the scenario in the environment to your advantage. So when we're chopping around ranging, it doesn't give me much for swing trades. You pay attention to the environment and what the market is doing in a whole. What is the context? And then you correlate that into your decision making and where you push the pedal and where you might just be hanging out. A few more things while we're on the weekly. Look at this. We have 2 EMAs right here at that 4,500 area. And if we do lose that 4,500 spot, look at where the next EMA is. This is how you use past price to help you determine future direction. When we're looking at a huge weekly chart, there's so much market generated information on this chart, and you see all of it stayed within this channel. If these EMAs fail, expect some downside. That is the biggest support for the bulls. And until those EMAs fail, you have to stick with the trend and trust the context. I just give you 2 scenarios because we do not predict what the market does. What we do is we prepare for either direction. No matter what, we're going to be ready to make money whenever the volatility comes, whatever direction. It doesn't matter to me. We just want to stick to the process. Now we hop into the daily on the ES, and we have the upper Bali at 760 right here. Follow the mouse. So that is the short-term area we need to see get broken. The past 3 weeks have been so big with the ranges. Each day we're having like 100-point ranges. So there's a lot of volatility. You see the huge volume days. That's how I have my candles colored. It is so important to see how the market acts when the big volume is there. Look under Friday's low, that wick, and these 250 EMAs. 4,600 will provide a big move down to 4,525. That is the measured potential. There's supply and demand levels, and they will work to the T very often. Before you put on a trade, how big was the move already? So if I, for example, want to short the futures, the S&P through that 45.90 below Friday's low, what I need to see is not too large of a move prior. Once the S&P or ES has gone 60 to 70 points, I consider extended. Sunday night we break through the lows. That will be a valid trade because Friday's move is not the same as Sunday night's open. Trading is a game of context. You can make shorter term trades on a 5-minute, on an hourly, but you're not going to be taking the levels from a 5-minute and hourly and using those levels to make decisions. I would be looking for, if we take out 670, we have some good room all the way up to this upper Bali at 760. If you do want to learn and grow over time, you just have to pick some people that you enjoy how they break down information and stick with them. Don't copy their trades. maybe paper trade their trades. You're going to realize patterns over time and figure out what you specifically like. Because the market, it's a game of personalities. On the rejection, we would want it to break through 760, and within a short time frame, like 5 to 10 minutes, we want to see 760 fail. If we want to take a bounce, we'll apply the same thing. We would want to see 525, it break through 525 and then pop back over within 5 to 10 minutes. You want to be a doctor? Go to school for 4 years. You want to be a lawyer? Go to school for 4 years, then intern for 4 years. You want to be a rocket scientist? Go to school for 8 years. You want to be a trader? You could start now, open up your account. That's why so many traders fail. They don't think of it with that longer term mindset. People just get in the market and they're like, oh, let's gamble big, let's not think about risk, and let's get rich quick, Lambo tomorrow. If you treat it the right way, the business is scalable, and there are people with millions, trillions, billions. That much money flows in and out of the market within a single week. Focus on being in here for the long term. You can't prioritize the money, prioritize the process over outcome. That's my weekly and daily breakdown of the S&P. If you enjoy it at all, I would love to hear some feedback, constructive criticism, things that you didn't like and things that you liked. But all I want to do is spread knowledge and wisdom throughout what I personally experienced, so I could save you guys some of the headaches that freaking were tough to go through. But yeah, if you enjoy, I really do appreciate feedback, and just drop me a like. I'll talk to you guys soon. Enjoy yourself.